Welcome back to this live trading session when I will be showing you all the things to watch out for when looking for an entry following precise entry rules. So watch me as I mark my chart and I'll explain why I am marking each area so you can repeat the same step with me. Okay, so I've just marked out a zone, and this zone is what others will see as a supply zone, but I will call it an entry zone for a sell. Why it corresponds with the supply zone, but it comes earlier than their supply zone. So for the supply zone, those who are marking on this time frame will mark this candle here, but I anticipated a supply when I marked this candle that formed here, and this candle is the entry candle based on string break entry rule. So based on string break entry rule, I already anticipate a possible supply zone. Now this is only being confirmed after the market has sold for the others. So but for me, because I have marked this entry candle, while others are waiting to see this downward move, this would have been my entry, and I would have been in the market already to make up to 10 pips profit before others will be realizing this zone. And since they are recognizing it late, they will only be trading it when the market comes to retest it. But because I found the entry earlier, I would have been able to trade it for all the moves it made downward. And that was about 30 pips move. So let's measure that early entry marking from 2702 to 2685. That's about 30 pips profit already when those who marked their supply zone have not even seen an entry yet. They are waiting for the market to come and test the level, but I have already found the entry. So I will show you how I'll mark the next ones so that you get to understand that. So until I see that zone to be marked, I'm going to mark my chart for you to see areas I am watching out for, and I'll explain what each area means. Okay, so I'm marking this area and I'll highlight it with the color I would prefer. First, the time frame I will select to only appear on one time frame, which is the time frame of my observation, and the color I'm selecting has already been selected. So this area is called a trend continuation zone or level. So this is my level for this entry move that was taken here. It first formed the first level when there was a bearish impulse, and this gave the first profit. Ordinarily, the exit price for this entry is here. When this break occurred, that was the exit price at 2695. That was ordinarily the exit price if I wanted to follow the impulse break exit rule. So I've explained that. So this is a level. It is marked here to show that whenever price breaks this level, this bearish impulse is expected to continue downward. And you can see what happened. When price broke that level, the bearish impulse continued downward. Then see what happened again. When price went towards that level, see the bullish candle with all its power just closed at the level, and price did what? Rejected it and came back down. So you see that that is a strong level, which is called a continuation or impulse break level. So continuation or impulse break level. So this was a rejection, and it gave you an opportunity to sell again if you knew how to trade the level rejection, because once this level is broken back upward, the market is expected to move in an upward direction. Then I'll mark the next point for you to see as I mark it always. So I've used the horizontal line now to mark this level and highlight the time frame to reflect only the time frame of interest. So the color will remain the same. Now this I have marked is called the turning point. Turning point is where see what happened after the impulse break. This candle closing at this price did not just close for nothing. It closed respecting a previous level, whether the level was marked or not. And that is what leads to the impulse break. Now, when it broke down that level will be reacted to in future. Now, the level forms a new zone, and that zone is called consolidation zone. So, now that this is a turning point, what I'm expecting is because it formed from a bearish impulse break, the market is going to do what is called bearish or bullish correction. So bullish correction on a bearish impulse whenever this turning point is broken. Okay, so now this is what happens. Since the turning point forms first and price comes down into the consolidation zone, two things happen here. If this consolidation zone breaks the impulse break level. Remember, there are 2 points I've marked here: impulse break level and impulse break turning point. Okay, so when price forms the impulse break turning point and returns back into the level between the impulse break level and the turning point, then you expect a consolidation. I'll pause here. Hello, I'll call. I'm coming. I'm coming, please. I'm doing something. I'm coming. All right. All right, sorry for that. I cannot cut that off. So now this is what is happening here. Because the price entered into this zone, this is expected for consolidation if this zone does not break immediately. But in this case, the zone broke immediately and gave us a continuation of the impulse. Okay, so that was what happened there. Then market broke back into this zone and again did not stay long in this zone, so did not consolidate yet on this time frame of interest. Instead entered back here. So when market breaks the turning point, this is what you say happens. The market corrects, and by correcting it goes to retest the impulse start level, which is what I'm going to mark next. And you see that the impulse start level will now correspond with the string break entry level, or marked as the initial starting point for the uh, potential bearish uh, entry zone. So let me mark that level, which is the impulse start level. This is how I mark it, and the color here is red because I'm marking a bearish impulse start level. That is why the color I'm using is red or crimson, as the case may be. So now this has happened. Remember that I've marked 3 points here before this current point. These three current points I marked, there were already 2 points. First was the string break entry level, okay, and then this was the entry indication or projection line to show that I expected the market to sell on this entry projection line. So that was why the line was pointing downward. Then this zone, I marked the whole of that entry candle because that candle is going to signal where the next what zone will form. And in this case, the zone formed as a supply zone. So you see that this string break entry rule gives you earlier entry before the supply zone is recognized. And right now the market has gone or is on the way to retest this supply zone. This is when those who are trading supply and demand will be looking to enter a sell. Whereas this is when I would have already made my profit and understood that the market has got to the correction point. And what happens in correction? If this is a trend impulse, what do you expect in correction? The market is supposed to come after reaching the last point, which is the 100% retracement level. Okay, after reaching the 100% retracement level or the starting point of that impulse, the market is supposed to retrace. Okay, sorry, the market is supposed to reverse. And that is where this principle of supply and demand comes from. Now, but the market does not necessarily have to do so if it intends to do what is called a trend change. Okay, and that is where the market can now break this level. And when it breaks this level, it gives you what is called a new trend. So if the trend was bearish, the trend now turns bullish. And that you will see what happens when those who were trading supply zone are considered taking a higher risk than those who are trading the string break, because this supply zone could be happening at a point when you are waiting for market to tap into the zone and reject the zone, just the same way I'm expecting that from the turning point to the impulse start level, the market is supposed to do what? Correct. Now, when market is correcting, there are two things that could happen. It could get to the impulse start level, which is supposed to be the end of correction, and reject it. That rejection is what forms what is called reversal back into trend. If that impulse direction was rather the trend direction. Okay, now if that is the temporal trend direction, the market can change trend when that impulse start level is broken. In this case, if this very candle that has come to test that impulse start level breaks it, which means that correction ends at this point and a new trend starts after this point if this level is broken. Okay, now that is what you are expecting. Now remember that those who did not trade with me on this string break entry rule would have already taken a sell at this point. So they are waiting for what is called the reversal to occur, and that is their supply zone entry to go into profit. So we are still watching that to see whether it happens or not. Now, this candle that has gone to test this impulse start level and is showing rejection of it is going to confirm whether or not the market is going to reverse back into the bearish, which is now going to confirm that the bearish is the trend direction. But if this candle closes above this level, which is the impulse start level, it is going to help us to start looking for the earliest indication of trend change. So we are going to see this in the next 1 minute. However, this candle closes, we will now be expecting either to enter on a reversal, which for those who are trading supply zone, that will be their sell entry. Okay, whereas our own sell entry came earlier when we sold on the string break entry candle. So I've differentiated three different watch activities for you who want to trade the entry. So I've shown you the zone trading, and the risk associated with it is that trend change could be occurring at the point you are expecting a zone. So see what the market did here. It came down or all the way to the 100% retracement level, because this is the 100% retracement level, and close on it. That is to tell you that there is a very huge probability of this market changing the trend from downward to upward. Okay? Because here you are telling the market that yes, you are still in correction. Here in this zone, you're telling the market that this is a supply zone. We want you to continue selling. And the market is telling you when it breaks that level that, see, I do not want to continue selling. I want to start buying. Okay? But if you are taking your entry here, you will not see or wait for the market to give you what it wants to do. So now, when do you take an entry? At supply zones. I want to explain that now based on the string break entry level. Yes. Now, at supply zone, you can take an entry, but before that, I want to mark something else that is happening here. If this candle closes bearish, okay, of course, that will answer my question still, but let's look at the formation that has happened here. This was an impulse, and this was an impulse break, right? So I'm going to mark those two zones, which will differentiate from what happened there because something happened while the market did the correction from the turning point to the impulse start level. So I've shown you impulse start level, impulse break turning point, and impulse break continuation level. Okay, so these are the three levels I've marked. Now, something has happened new here, which I'm going to mark because that is what you always do. You mark whatever is new. There was an impulse that started here. So this is a new impulse start level to be marked. And on the time frame of attention, I'll change the color to blue or green because it is a bullish impulse start. Then we'll also have the impulse break level or continuation level. I'll also highlight only the time frame of observation and then change the color to red because it is the impulse end, okay, or break level. Now remember what happened here. That is what is also happening here. That when the market broke this impulse uh, break level, what happened? The impulse continued because it's a continuation level. So the same thing you're expecting here. When the market breaks this impulse level, what are you expecting? The market is expected to continue in the direction of impulse. So that is why I explained that. You see, those who are trading the supply zone, you may be trading supply zone when something like this structure has already happened. And in this case, when do you take an entry? Right here, you can take an entry for a buy here, but because there is a previous impulse start level that has not been broken yet, you cannot buy yet. So you want to take an entry only when this impulse start level, previous impulse start level is broken. You observe the break, then observe a candle called, after the break, the observation candle. Then after the observation candle, you observe the confirmation candle. After the confirmation candle, then you take an entry on the next candle, which is your entry candle. So you want to see a break, observation candle, confirmation candle, and then entry candle. Those three candles must open and close above this impulse start level for you to start taking your buy. Okay, that is for that. Because of this structure that happened there, there was an impulse start level, okay, that has not been broken fully when this new impulse break level or continuation level formed. And both of them are converse levels. So within this zone, you cannot trade. If that is clear, now I have another point to mark. Because this point is still valid, I had a previous point here. I could have taken this turning point again down here or take it to the new turning point here. But what I'm going to do is I'm going to leave these three turning points for future reference. So first of all, I've updated the current turning point, which is here. The reason I'm taking it to the current turning point is because if the market returns into this zone, like you see it's returning into this zone, now you see that the entry requirement for buying here has not been met because there was what could hold price back here. Now, this turning point is going to signal where the market should consolidate because the market has come into the zone between the turning point and the impulse break or continuation level. Okay, so now the market has three problems to deal with: turning point for impulse break, and then impulse break level or continuation, and then previous impulse start level. The market will have to break any of these levels. So you want to sell for a supply. If you know the structure, you will only sell when the market is coming down here by breaking this turning point and then gives you a sell back into this structure, which is a supply zone structure. If you don't know this, you could sell early here and be in a tight situation with the market. So let's look at what would have happened for those who entered on their supply zone. So this was their tap in candle. Let me measure the price at 1.2701 to 1.2691. That will be your take profit. 1.2691. The market has not come to your take profit yet, and your stop loss is also a little distant from here. So the market has not given you profit yet. It's still within your entry zone for those who entered on this. But notice that for me, this has already given an entry. So now, but there is also a new entry that formed here. Let me explain what that entry is. that entry is another string break entry. And that entry met what is called the ultimate entry rule or formula. When I explained that you see the G3 plus 1 plus G2 equal to what? Enter. So I'm going to take an entry because of that, just to explain that for you. So I've taken an immediate sell entry there, and I'm explaining that here for you to see why I took a sell at once. That's because I'm using the ultimate entry formula. And that entry formula now is disregarding all of these three things here. Why do I have to disregard them for that? Because this ultimate entry formula supersedes all of these other things here, because it doesn't always happen. It is only when it happens that it now makes you to look at this, look at this, look at this, and take a decision. So, besides that, ordinarily, this string formation here and the string break formation here means that I can highlight this whole candle, this whole bearish candle, as the new entry zone. So let me highlight that. Following what I did before, this will be it. Just that this is a larger entry candle. So let me highlight that. And remember, this entry is not about, this entry I took now is not really about supply and demand, like I explained. I took this entry based on what I mentioned. That's the ultimate entry formula of G3 plus 1 plus G2 equal to E. So this is the entry candle for a sell, which I took here. Now, if that does not hold water, remember there's another place to enter. I can only enter when this impulse start level breaks. Okay? Just like the market is going, that is when I'll enter for a buy. And right now, I've not seen the entry for a buy. So I only saw an entry for the what? Impulse start. Or rather, I saw an entry for the string break level following the ultimate entry formula. That is why I took a sell here. Then also, I would have taken a buy here. Remember, I've explained that before. I'd have taken a buy here, whereas those who are trading supply zone would have taken a sell here. So I've explained the three things I'm looking out for. But why didn't I take a buy here? Because there was an impulse start level that has not been broken. So that explanation has to be understood. Then I have to wait for that impulse start zone to be broken, because the market has to deal with these two problems here. Now, this level formed tells me that there is supposed to be what? Impulse continuation following the previous impulse that was broken. Okay? But now that impulse cannot continue because this is a correction zone. Correction zone or retracement zone. We started when this impulse formed and was broken, which meant that if I draw my impulse break turning point here, just as it was before, the market was expected to correct all the way to that impulse start level. So all of this was expected. The moment this turning point broke, the market was expected to correct all the way to this impulse start level, which is a 100% retracement level. Okay, which after that, the market is expected to do what? Reverse back into trend. If this previous impulse is really the trend direction. I've explained that repeatedly. But if the market intends to change trend, then you see this level here will have to be altered. That's to say the market will have to compromise it, break it, and then buy above it. It is only when the market does that that I know that the trend has changed. So I could not have just taken an entry blindly because of supply zone. Okay, I have to base my entry now only because of something else. Otherwise, the next place to have taken an entry will be after the newest or most recent turning point breaks, which is 1.2696. When that turning point breaks, I know that the market has successfully respected, first of all, the previous impulse start level, again, the new impulse break or continuation level, and then the new impulse break turning point. It is until that happens that the sell is expected to be valid, confirm with those who have entered on their, what do you call it? Those who have entered on their own supply zone. So I guess that is clear already. If that is clear, then let's look at the next thing that plays out in the market in real time, because this is live trading demonstration. So what was the next thing? The next thing is that if the market successfully leaves this zone, because this zone is formed by two levels. One is a previous impulse start level and the new impulse break, okay, impulse break or continuation level. And these two are converse levels. The previous was bearish impulse start and the current one was bullish impulse break. Okay, so these two levels contradict each other, and the market will have to make a decision here, which can be either to respect these two levels and break downward to a sell, or to break these two levels and start a new upward trend. So these are the two things I am expecting to happen. Whichever one happens first, I would take a decision for an entry. So, but right now, what is the nearest decision to take that corresponds with more than one entry rule? This is it. First, there is a supply zone, okay, which means a sell is probable, more probable. Secondly, there is what? The ultimate entry formula here. And also there is a string break here, which gives us a new entry zone. So the market is currently in the new entry zone because this zone I marked out here covers the whole body of the entry candle after the string formation. Okay, so there are three things supporting the sell here, but I said that sell has not been confirmed until the new turning point breaks. Okay, when that new turning point breaks, because once it breaks, the market now has a free zone to come and test the start of the current bullish impulse that broke at this point. Okay, and that is now the retracement. Now I can add some other thing on my chart so that you see what the retracement zone looks like. So this is what retracement zone looks like, or retracement level. So let me add that to on my chart so that you see Fibonacci retracement tool. I'll start it. This is the 100% level. Take to the 0% where that break occurred. That's the 0% level. Now, the market when retracing, we have to come and retest this impulse start level because that was what happened here. Okay, so if the market is going to retrace, then it has all of this zone to cover, all the way from level 0 to level 100. Then again, like I said here, this was the level 100 of the previous bearish impulse start level. Okay, which if that level 100 breaks, you'll be expecting a trend change for a buy. The same thing will happen here. If this bullish impulse start level, which also corresponds with the retracement level 100, breaks, the market is expected to sell. But you must see the break confirmation, which means you want to see the break candle, one bearish candle that breaks. Then you want to see the observation candle after the break, which should close bearish. You want to see the confirmation candle after bearish, we should also close bearish, and then the entry candle. That is when you know that this is a trend change or a directional change for here. The same thing is going to happen here too. When the break happens, you want to see that you have break candle, observation candle, then you want to see confirmation candle before your entry candle. So all of those things are the things to watch out for. I've used different tools to show you what is possible with the market at any given time. Now, these are the things you can always mark on your charts. I've shown you this. If the next thing plays out again before we end this session, I'm going to mark that. But it seems like the market has already started the consolidation because it has come now to retest this word turning point. Okay, remember I told you that between the turning point and the impulse what and the impulse break level, there is consolidation. Then between the turning point and the impulse start level, there is correction or retracement. So this is consolidation. And the market now has even a wider consolidation zone because of the previous impulse start level that has not been broken, the new impulse break level that has not been shown to be a continuation yet fully. Let me explain that again. This is impulse break level, okay? So I'm going to take all of these candles that happen inside that impulse break level to explain that. Assuming this level was not here, so where would I be expecting to buy on an impulse trend continuation if the trend was bullish? Remember, now we have two converse and alternate trend. We have the bearish, we have the bullish, all happening inside the same zone. So here, the market broke. This was the break. Then this that was supposed to be the observation candle altered that break. So we'll be expecting another break again, which was this again. This was the break. Then this again was supposed to be the new observation candle did what? Close bearish. Now this new candle again is expected to be the next break. Then you find observation before confirmation and entry. Okay, so if that structure does not play out yet, there is no impulse continuation entry for a buy. You see that? So for currently trading the impulse break level, you cannot take an entry yet. I said even without looking at this. But because of this is now brought into the picture as it occurred here, you want to see everything occurring as a trend change, not impulse trend continuation. Okay, so this is bullish impulse trend continuation and this is bearish impulse trend change. So the market is expected to change from bearish impulse trend to bullish impulse trend. Okay, or bullish impulse continuation. So this is bullish impulse continuation. This is bearish impulse trend change. So market is expected to change from bearish trend to bullish trend above this zone, while market is supposed to continue from bullish impulse. Okay, and that is the structure I've explained in the market here. So remember, I explained why this entry was taken. It was taken because of, first of all, there is a new rule that supervenes on all other rules applied here, and that is called the ultimate entry rule, where the market gives me an impulse, a break, and a string structure. Once I see impulse, break, and string structure, I know that my entry is on the candle that breaks the string, which corresponds with the string break, corresponds with the ultimate entry, and at the same time gives me exactly what I want to see, correspondence with those who are trading supply and demand, support and resistance. So now the market has come to retest the turning point. Notice what happens there, because this is one tutorial I want you to see as it really happened. This is a turning point I told you that is formed from the impulse break. Okay, so impulse break turning point, the market comes to test that turning point. It rejected it for the first time, as you could see, and then now it breaks the turning point. This is the previous turning point. Okay, between this turning point and this start is a consolidation zone. So here I can take my profit first of all, because I expect the market to consolidate there. So let me do that and explain why that is important. Now, I expect the market to consolidate here, okay, between here and the previous impulse start. This is the previous impulse start consolidation zone, okay, just like this is the new impulse start consolidation zone. That's the levels in between the turning point and the impulse start level. That is called the consolidation zone. So you see why I took my exit there. And what did you see happening there? The market respected, okay, that previous turning point and is entering back into its consolidation zone. Now there are two consolidation zones now playing out here. You see that my entry and exit all corresponded with a plan. So again, I told you that when should you want to sell? You want to sell after all of this has been altered. Okay, and that is only if the market comes below this turning point. You want to know that, okay, now this entry taken here for those who are trading supply, okay, has now been confirmed